Buenos días, buenas tardes, y buenas noches. Bienvenidos a todos. Welcome back, everyone. Glad you're here. Today we're going to be talking about monthly dividend stocks. Some of my favorite stocks in my portfolio. This is a good time to be in them while the other stocks have been going through a correction. The value plays, the dividend plays, they've all been doing well. So shout out to everyone who's been holding those throughout these crazy times. And it's not too late to get in if you haven't got in already. As always, I'm glad you're here. You could have been on YouTube watching anything. You could have been watching one old guy seriously discipline another. Or you could have been watching one guy that woke up this morning and clearly chose violence.
Matter when you work, because I told you last night don't be fucking smoking if you ain't got my fucking money. I told you that shit last night, right? If you ain't got my money, right?
Anyway, I'm glad you're here. Roll the credits and let's get to it. Right, out of the monthly dividend stocks I wanted to show you today, I think they all fall under REITs. They're all REITs, which are real estate investment trusts. I've got here a page on Investopedia. I suggest you look at it if you come across a lot of, stock lingo that you're not familiar with. It will give you the definitions. And here, as you can see, it says a real estate investment trust is a company that owns, operates, or finances income-generated real estate, modeled after mutual funds. REITs pool the capital of numerous investors. This makes it possible for individual investors to earn dividends from real estate investments without having to buy, manage, or finance any properties themselves. So basically, you manage to get paid from real estate without actually having to own any or deal with any tenants or all the other BS that goes along with it. Right, to qualify as a REIT, a company has to meet a certain criteria. I'll just go through these three of them. Invest at least 75% of total assets in real estate, cash, or US treasuries. Derive at least 75% of gross income from rents, interest on mortgages that finance real property or real estate sales. And the most important one, pay a minimum of 90% of taxable income in the form of shareholder dividends each year. So, as the shareholder, you'll be entitled to a lot of money from REITs. That's why you find the dividend income from them is a lot higher than other stocks you might be looking at. So I'm going to show you a few today, but let's look at my favorite one, which is AGNC. As you can see, I've got the chart set year to date. And as you well know, if you've been investing this year, we've been going through a correction at the moment. So all prices are pretty low on growth stocks and whatnot. So if you had the opportunity, what would have been good was to rotate out of your high growth stocks and put them into value and dividend plays. They're going to be the ones that really excel this year. This year's going to be nothing like last year, where everyone seemed like a genius on the stock market. Whatever you put your money in, it was doubling and going to the moon and whatnot. But now you actually got to think more clever about your investment choices. And as you can see, year to date, this AGNC has done nothing but go up. Well, if we look at Tesla, which we know had crazy gains in 2019 and 20, the trend has been complete opposite. It's been going down. It won't stay that way. Give it till, I don't know, about summer or maybe less than that, and it will start going back up. So now is actually a really good time to get in Tesla. But my point is, if you was trying to continuously make money throughout this period, you would have had to rotate out of these high growth plays and get into the value plays. And AGNC is one of my favorites. Right, on AGNC's website, on their About Us tab, you get to learn where, they bring in their money from. It says predominantly in agency mortgage-backed securities and also from the borrowing that they do. But a bit I've highlighted, our principal investment objective is to provide our stockholders with attractive risk-adjusted returns through a combination of monthly dividends and net assured value accretion. And also, if you go to their portfolio, you get to see here 90.3 billion investment portfolio as of March 31st, 2021. And as you can see at the top, 30-year fixed, 72.2 billion. So yeah, that makes me feel a lot, very confident having money invested in them. As you know, a lot of that money is tied in for a long time. And like I said before, they just reiterate it here on their website. It says, we operate so as to qualify to be taxed as a real estate investment trust under the Internal Revenue Code of 1986, as amended, the Internal Revenue Code. As such, we are required to distribute annually 90% of our taxable net income. So here, you can actually see all the payouts that they've made. And they pay monthly, so for me that's brilliant. You can see, you can go, I don't know how far you can go back, but if we just look from here, January 2018, they was paying 18 cents. It has dropped a bit from 18 to 16, let's move that over, to 12 cents at the moment. So every share you own, you're going to get paid 12 cents. I know it doesn't sound like a lot if you just own one, but the aim is to earn a lot. So this takes me to the next step of my investment plan. Right, my personal investment plan, it's not to say it should be yours. I'm not a financial advisor. I'm just telling you what I do and documenting my journey along the way. As we know, Agnc pay 12 cents for every share owned. As of today, 12 cents is 8 pence, 8.5 in pound sterling. So me personally, every stock I own that's a dividend stock, my aim is for every payout to receive no less than £10. So with that, Agnc would bring me £120 a year for owning their stock. So knowing that it's 8 pence, right, if you don't use Dividend Max, I highly suggest you do. It's a very good dividend. They got a very good dividend calculator on there, and they give you good breakdowns of the stock as well. They also tell you here, once you sign up, how much you'll be receiving per share also. So as you can see, like on the actual website, it was 12 cents that you're going to get. But I used their calculator, and $15 at the moment works out to be £10. I've got that here. So to receive £10 a month, I would have to own 130 shares. Not gonna lie, that's gonna be a little bit of money. Let me just grab my phone and I'm gonna check that out. Agnc to own 130 shares is going to cost £1,679.20 as of the day of recording. But saying that, like I said at the moment, dividend stocks are a much more safe place to hold your money at the moment. So the share price has actually been going up. I imagine once this correction's over, the price will decline slightly, so you'll be able to get that for a bit cheaper. But basically, for £1,600 with Agnc at the moment, you're going to get £10 every month, so that's £120 a year. And over time, I imagine the share price is going to go up, so you're going to get a bit of share appreciation as well. But £1,600 bottom line is what's going to get you £10 a month with Agnc. Now I'm going to show you another company that I do the same thing with. Right, the next stock I want to show you today is definitely by far the most popular monthly dividend stock, and that's Realty Income. And as you can see on the yearly chart today, again, no form of nonsense going on. It's been performing very well, done nothing but go up really. So anyway, let's take a look on their website. Even here, very where's that bold statement? They have the Monthly Dividend Company. Everyone, if you look at monthly dividends, everyone knows about Realty Income. They're a member of the S&P 500, and in the S&P 500 Dividend Aristocrats Index. If you don't know what a dividend aristocrat is, a dividend aristocrat is a company that not only consistently pays a dividend to shareholders, but annually increases the size of its payout. Unlike the one I previously showed you in Agncs, where theirs takes a dip. It does have a bigger yield, by the way, Agnc, but Realty Income either maintains the same or it goes higher every year. The company may be considered a dividend aristocrat if it raises its dividends consistently for at least the past 25 years. So, I don't have much complaints with Realty Income. Share price is a bit higher, but it is definitely a much safer stock to hold. What I also like about Realty Income is their portfolio, the companies that they rent space to. They got some huge names. Let's have a look in their portfolio. Top 20 clients. Let's have a look. Walgreens, they're huge in America. 7-Eleven, everyone knows 7-Eleven. Dollar General, FedEx, Dollar Tree, Sainsbury's, LA Fitness, AMC Theaters, Walmart, list goes on. B&Q, Kingfisher, Tesco, CVS Pharmacy. And you can also see how much leases they've got. Like, look at this. This is crazy. So, they're not going anywhere. And a lot of these businesses throughout the lockdowns, they were open, Walgreens, 7-Eleven, the supermarkets. I imagine places like Home Depot and B&Q, they were closed for a while. I don't know we don't have Home Depot in the UK, but we got B&Q and they were closed. But as soon as they opened again, bam, they were busy. Everything sold out. So yeah, I've got a lot of faith in Realty Income. When you look into their background, it says Realty Income focuses on acquiring freestanding single client properties under long-term net lease agreements. For retail properties, we target clients with a service, non-discretionary and or low point component to their business. For non-retail properties, we target primarily industrial and distribution properties leased to Fortune 1000 investment grade rated companies. And you can also go into their team contacts and, see who's behind this. And with due diligence, when it comes to choosing your stocks, you can do as little or as much as you want. There's nothing stopping you from, putting these guys' names into LinkedIn, seeing what their backgrounds are, seeing if they got fired for smoking crack on their lunch breaks. Like, you might want to know this stuff.
I'm here for the same reason you is, man. I want some crack.
Seeing if there was a bit of a Judas and sold out their company to the next one they joined.
You will always be Judas in my house.
So, that's up to you. But with certain companies that I'm investing, what's a lot of money to me, may not be a lot of money to others, but I would actually go and check these guys out and, see what kind of person you're actually dealing with. Right, now we're on their dividend payment information page, which is obviously vital for what we're looking at today. If you don't know about these headers here, if you're new to dividends, I'll just give you a brief explanation. The declared date, so on the 13th of April, when they announced, right, we will be paying a dividend of 23 cents. And like we said before, you could see it's only gone up as they're a dividend aristocrat. The ex-dividend date now, basically you have to own the stock on this day to receive the payout. But you cannot buy it on this day. You have to own it on the day. So really, where it says ex-dividend, whenever you see ex-dividend day, know to yourself, you have to have bought that share the day before you actually see it listed here. So on the, what's this? Oh, I hate these American dates. So on the 29th of April, you would have needed to own this share to get the payout. And here it says the payment date is the 14th of May. You will receive your 23 cents for every share you own. But if you're using a app like Trading 212, Freetrade, eToro, whatever you use, the payment date you see here on the website is not it's not the day you'll get it. There's a delay. So don't go by that date, but definitely go by the ex-dividend date. Always make sure you own the stock the date before. Right, and using the same method I did before on dividendmax.com, I worked out to get a payment of $15.28 a month, which is about £10. I'm going to need to own 65 shares. Now, I already know this is going to be a lot more than Agnc, but 65 shares of Realty income will cost you, of the day of recording, £3,017. But that will be, again, £10 a month, £120 a year for as long as you own the shares. And again, I reckon the price will gradually go up over time. So yeah, you are paying for the stability of the stock. I know £3,000's a lot more than the 1,600 in Agnc. You might think, well, why not just put double in Agnc? But you are paying for the stability, the fact they're a dividend aristocrat, because they've been raising their dividend for 25 years. But I believe they'll be on their way to becoming dividend kings, and a dividend king is someone who raises their dividend for over 50 years, like Coca-Cola and some other companies, I believe Procter & Gamble and a few others, where, you know, for the dividend, your money is truly safe. So, but that's up to you to decide. Right, our next and final one is Main Street Capital. There are so many monthly dividend stocks, and some will say that you shouldn't pick a stock mainly for the monthly dividend. You should be more looking at the company rather than how many times they pay out a year. But it all depends on your investment strategy. And one of mine is to get as many payouts as possible throughout the year. But yeah, with that being said, Main Street is another good one. Let's look here. Main Street Capital is a leading investment firm that provides simplified one-stop shop capital solutions to lower middle market companies. By providing both debt and equity capital, we help entrepreneurs, business owners, and management teams accomplish their goals, whether their goals are to achieve liquidity, to diversify their personal wealth, facilitate management buyouts, and/or pursue growth and acquisition financing. Right, you can have a look under portfolio companies to see which companies, you know, they have dealings with, and there are loads. I'm not gonna lie to you, as you can tell, I'm from the UK. I don't know a lot of these companies. You know, you could tell me in the comments if you happen to be watching this in America and tell me if you know these companies, but I, for one, don't really know them, but there's a lot of them. Again, it's how much due diligence you want to do. But what I know of Main Street Capital, I'm happy enough to invest without knowing exactly who they've got their dealings with. But as you can see, there are loads of companies, and this is just one page worth. Right, one thing I do like on the Main Street Capital website is they actually have a dividend calculator. And as you can see here, you need 75 shares to get you that $15 dividend each month, which, as we've said, we know is £10. So let me just see, 75 shares. 75 shares of Main Street is going to cost you £2,168 as of the day of recording to get that tenner a month. So what's that? That's kind of in between Agnc and Realty income. So yeah, what have we learned from that? That Agnc is the cheapest, followed by Main Street Capital, then Realty income to earn £10 a month. But had you got all three, you're gonna get £30 a month, and that's for as long as you own the stocks. You know, you could dedicate that to be paying off your phone bill or whatever you choose, because that's my aim with my dividend stocks, is to be paying all my bills. So then, you know, you're literally buying back your freedom as such. At that point, you might decide you can afford to go to part-time work, or whether you decide you're going to make your dividends pay for your for your rent or your mortgage, whatever the case may be. That's my aim with dividends, is just to make my life a bit easier. So yeah, you know, it's up to your risk tolerance. If you got low risk tolerance out of this list here, you're going to want to go with Realty Income. You're going to pay more for it, but you know your money is in safer hands. But saying that, there's nothing wrong with Main Street and there's nothing wrong with Agnc. I'm going to put up a list of other dividend stocks that you can look at. I would have covered Dynex Capital. They're another one to look at, stock ticker DX, but I don't want to drag on this video too much. But that's another one of my favorite ones because it's around the same price range as Agnc. But yeah, it all personally comes down to your risk tolerance, and you might like certain companies that they lease out their properties to or whatnot. You know, it's all on you. But those are three of my personal favorite monthly paying dividend companies. Right, if you've made it this far, thanks for watching. Much appreciated. Trust me, it really means a lot. And if you haven't subscribed already, please hit that subscribe button and press the like button also, and share the video with your friends who, you know, might have an interest in stocks and crypto related discussions as well. And feel free to drop a comment and let me know what you think of the video, and maybe if there's something you want discussed, then let me know. And if you haven't joined Trading 212 or Freetrade yet, there's going to be links in the description below. And also what I'll do is in the description below, I'll put a list of other monthly dividend stocks. I did want to cover more in this video, but I didn't want it to drag out too much. So below I'll leave a list of other monthly dividend stocks you might want to look at also. And also remember to let gratitude be your only attitude, you know, where the world's just reopening again. So let's all get out there and be nice to each other. And hasta la semana próxima. See you guys next week. Adios. Peace.